How do you determine how profitable a trading strategy really is? I get this question a lot from newer traders. How profitable is this new, never before seen trading strategy? Sometimes when they're asking this question, they're asking about strategies we come up with here at the Trading Channel. Other times they're asking about other strategies they have been taught. But I have a question for you. If I or anyone else creates a trading strategy and tells you it is 80, 90, or 100% accurate, should you believe it? Well, the answer is no. Why would you? When trading, it is your hard-earned money that you are putting at risk each and every time you place a trade. So why would you trust someone else about how profitable a strategy is? Now, you can trust them to a certain point if they are someone you see as trustworthy, but not to the point of trading that strategy blindly. Well, after this video, that will no longer be necessary. Today, I want to share with you the most powerful skill a trader can possess and show you exactly how to create a rules-based strategy and test it to check its validity and profit potential yourself. This way, the next time you come across a strategy, you will be able to independently test that strategy to determine its true winning percentage, profit potential, and much more. Hopefully now you can see how powerful this skill really is. Today, we're going to create an entire rules-based trading strategy together based around a series of conditions and a very simple entry reason. We're going to talk about backtesting this strategy, creating a risk management plan, and we're actually going to go through the entire process of creating a trading plan around one specific strategy. This is going to give you the tools you need in order to create success in your own Forex trading business. I'm extremely excited to get started, so let's go ahead and move on to our first slide. Our first slide is creating a rules-based strategy. And in today's video, we are going to create a strategy that's based around a series of conditions and a very simple entry reason. This strategy can be as strict or as discretionary as you would like to make it. I personally like my strategies to be very strict. So what that means is we're going to discuss a set of very strict, very specific rules. And if you would like to change any of them, it is completely up to you to make the strategy a bit more discretionary and a bit more your own, but you will have very strict rules to use with this strategy by the end of today's video. The reason for this, extremely strict in my case, because that's what I personally like, rules-based strategy is to give us consistency in our trading, a way to place a trade consistently based on the same set of rules, same set of market conditions each and every time, and to give us a strategy that we can validate through historical data through the process of backtesting. So the reason we would want to stay consistent with all of these rules, with this rules-based strategy based on a series of conditions and a very simple entry reason, is because we're going to backtest it first through historical data after we've created it if this specific set of rules, conditions, and entry reason give us an advantage over the market or an edge over the market. You hear a lot of people talking about creating an edge over the market. If these specific rules give us an edge over the market, then we want to make sure that we consistently place trades based on those rules. You see, trading is a game of probabilities. You're not always going to win, and that's why it's so important to find a strategy that is based on a set of rules that can give you that slight advantage or that slight edge over the market. Next, we're going to talk about backtesting. Backtesting gives us the chance to test the validity of a strategy and estimate what the possible drawdown and return on investment of any particular strategy may be, at least any particular rules-based strategy. In turn, this gives us a chance to create an appropriate risk management plan in order to accommodate for your own personal risk tolerance. So throughout your backtesting process, you're going to be recording trades as they happen based on the conditions you've set forth in your rules-based strategy and the entry reason. And I'm going to show you all that in just a little bit, in just a second here. But once you have those rules and conditions, testing them through historical data is going to give you a chance to record all of that information, your wins, your losses, the amount you won and lost on each trade. And by the end of your backtesting process, you should have an appropriate sample size, let's say 100 trades. If you have 100 trades and you see what the possible drawdown of that strategy is going to be, then you can adjust your risk per position in order to accommodate for your own risk tolerance. What I mean by that is if you are risking 2% per trade, and the drawdown of this specific strategy we're going to test through 100 trades gives you a 20% drawdown, and you're uncomfortable with that, you can then adjust your risk per position down to 1% per trade and cut that drawdown in half. So that is one of the main purposes of backtesting, is to help us accommodate for our own personal risk tolerance through the process of creating a risk management plan. Now, backtesting also helps to install the confidence and discipline we will need in order to stay consistent with any particular strategy through a string of losing trades or a drawdown. So those are the main topics we're going to be talking about today. Now let's jump over to the charts. Let's actually create this rules-based trading strategy together. We'll talk about how to backtest and build a appropriate risk management plan around it, and that in turn will give you what you need to create a trading plan around this specific strategy. Let's go ahead and do that. I'll see you guys on the charts. So if you want to build a rules-based trading strategy side by side with me, then we just released a free training that is linked in the description where I build side by side with you a momentum-based breakout strategy we developed in order to take advantage of trending markets. We will go into depth of the rules of this strategy along with detailed information about how to backtest it. We'll go a little further into creating a risk management plan as well. That video got a little bit too long for us to post on YouTube, which is why we labeled it as a free training. It's linked in the description below. Also in that video, we give you an opportunity to opt in for some of our Black Friday discounts. So if you're interested in either of those, that link is in the description labeled EMA CP Strategy Tutorial. But for now, what we're going to do is talk a little more about how to backtest strategies and independently figure out how profitable a strategy truly is. So when backtesting a strategy, of course, first you need a strategy. And in order to do that, what we're going to do here is just take a look at double bottoms and double tops, with the 200 EMA being our trend indicator, and looking for double bottoms above the 200 EMA and double tops below the 200 EMA. All this is an example so that you can see what it looks like to have a rules-based strategy. So if we were looking for our strategy, we would say that we were looking for a double bottom. We would then create rules for a double bottom. We would see this double bottom happening. We would create an entry rule for the double bottom. Maybe the entry is right in this area after this long wick to the bottom side. We get that entry, then we develop rules for stops and targets. That is all you need for a rules-based strategy. You need a set of conditions, and that needs to be mixed with a very specific entry reason that you use along with stops and targets. And if you have rules for all of that, then you have yourself a rules-based strategy. Now, why is this important? Again, just like we said earlier in the video, we need this rules-based strategy in order to trade as consistently as possible and in order to test this for validity. So in this specific situation, we would be looking for every single scenario where the market created a double bottom based on your rules for a double bottom above our 200 EMA. What is our conditions? Our conditions is that we need a market to be above the 200 EMA. Another condition is we need to see a double bottom. Now, what can our entry reason be? We have those two conditions met. Our entry reason can be a candle with the wick twice as long as the body that's on the bottom of the candle. That can be the entry reason. And with all three of those, do I know if that's profitable right now? No, I don't. But could I find out? Well, yes, that's what the awesome part of having rules-based strategies and using rules-based trading does for you. Whether I know if this strategy is profitable, whether I know what the winning percentage is right now, is irrelevant, because all it takes is me doing the work, going through historical data and backtesting this strategy to see if it gives an edge over the market. And why do we need to know if we have an edge over the market? Because if we're going to consistently place trades based around a strategy, we want that strategy to be giving us an edge over the market. We don't want to be trading ourselves into an empty bank account. Another very important part of backtesting, other than finding out that we have an edge over the market, is creating a risk management plan that we can use to help us stay disciplined to the strategy. When I say risk management plan, if we test this exact strategy we just talked about, looking for a couple of other scenarios, this might be something worth taking a look at. But here is another double bottom. There's no long wick to the bottom side. Again, depends on your entry. Maybe a close above candle like this could be another way to enter this type of trade. But if we look through historical data and we see that this gives us a 55 to 65% winning percentage. Let's say on a good note, we have a 65% winning percentage use this, but based on our backtesting results, we see that we have about a 20% drawdown. Now that 20% drawdown is going to be manipulated by your risk per position. So if you're risking 2% per position or 2% per trade and you end up with a 20% drawdown, how would you manipulate that? And what I mean by that is, how would you change that drawdown? Well, at the point that you're risking 2% per trade, trading this strategy, and let's say with that, you end up with a 20% drawdown based on your backtesting results. And in order to do this, what you would do is take all of your backtesting results, sort them by date, and put them in an applicable spreadsheet that can tell you maximum drawdown, just to keep that really short. And what you would do is plug all that information in, and if you saw that with a 2% risk per trade, you had a 20% drawdown, all you would have to do in order to make an appropriate adjustment to your risk management, let's say you're not okay with a 20% drawdown. You're only comfortable if you have a 10% drawdown. Well, if you were only comfortable with a 10% drawdown, then you could reduce your risk to 1% per trade, and doing so would give you a 10% drawdown. Now, obviously, this will also affect your return on investment, but backtesting is the way we get a nice view of what the potential profit and the potential drawdown of any strategy could be, and that's why this tool is so powerful in trading. It's because we no longer have to trust other people when they tell us what a strategy can do. If they can give us the rules for that strategy, then we can go out and independently test that strategy for ourselves, giving you a better chance at trading success. So I hope this video was helpful, guys. Again, if you want to learn more about the EMA CP strategy, then we are going to leave that open until Friday. It's kind of a Thanksgiving gift from us here at the Trading Channel. That free training is linked in the description under EMA CP strategy tutorial. Also, our Black Friday discounts are available in that presentation, so check that out by clicking the link in the description. Other than that, I hope you now see the power of understanding how to backtest a strategy yourself in order to be a completely independent trader. I wish you the best of luck on all your future trades. Click that subscribe button. If you're new here to the Trading Channel, click that like button for me to help support the channel, and I will see you guys next time.